Welcome back to Xul Podcast, Shooting the Reality. I'm James Carroll, and I'm excited to dive into another fascinating topic today.
And I'm Emily Laura, ready to connect the dots and see the bigger picture, as always.
Today, we're taking a deep dive into a topic that's really shaking things up in the global economy.
The rise of digital money.
That's right. Is physical money on its way out? And if so,
What role will cryptocurrencies play in this new world?
that's the big question we're exploring today.
And we've got a lot of ground to cover.
Yeah, we'll be drawing from IMF reports, expert opinions, real-world examples.
All kinds of stuff to give you a well-rounded perspective.
You know, it's funny, I was thinking the other day how I haven't actually used physical cash in weeks.
Really?
Yeah, it feels like everything's going digital these days.
It really does.
From buying coffee to paying bills,
Yeah.
it makes you wonder, is this the beginning of the end for paper money?
It's a question a lot of people are asking, and it's a real possibility.
So are we talking about a cashless society here?
We might be heading in that direction. Think about this. Around 100 countries are already exploring central bank digital currencies, or CBDCs.
CBDCs.
Yeah.
Hold on a sec. For those of us who aren't familiar with all the financial jargon,
Sure.
what exactly is a CBDC?
A CBDC is basically a digital version of a country's physical currency.
Like a digital dollar.
Exactly. It's issued and backed by the central bank, just like the bills and coins we use now, but it exists entirely in the digital world.
So instead of carrying around a wallet full of cash, I'd have a digital wallet on my phone.
Precisely. And it's not just some futuristic concept.
Oh, really?
Countries like the Bahamas have already launched their own CBDCs, like the sand dollar.
Wow. So it's actually happening.
Yes.
But CBDCs are just one piece of the puzzle,
Yep.
right? There's also all this talk about stablecoins, e-money, and cryptocurrencies.
You're right. There's a whole ecosystem of digital money emerging.
How do all these different types of digital currencies fit together?
Think of it as a spectrum. On one end, you have CBDCs, which are centralized and issued by governments on the other end. You have cryptocurrencies like Bitcoin, which are decentralized and operate independently of any government or central bank.
Okay, so a spectrum of control and decentralization, I guess.
Exactly.
And where do things like stablecoins fit in?
Stablecoins like Diem and USD Coin fall somewhere in between. They are typically issued by private companies, but designed to maintain a stable value pegged to an existing asset like the US dollar.
Hence the name stablecoins.
Exactly. This stability aims to minimize the price fluctuations we often see with cryptocurrencies like Bitcoin.
Got it. So their value is more predictable. And then there's e-money, which I think a lot of people are already familiar with in some form.
Right. Think of platforms like PayPal or mobile money systems like M-Pesa in Kenya.
Oh, yeah. I use PayPal all the time.
Those are examples of e-money, essentially digital cash stored on a device or within a network.
So that's already pretty integrated into our lives.
It is, and it's often issued by private companies and typically pegged to a national currency.
Okay, so we've got this whole range of digital currencies, each with its own quirks and implications.
Yeah.
But what's driving this shift toward a digital-first financial world? Why are we even talking about the end of physical money?
There are a few key factors at play. Digital money offers a number of potential advantages over physical cash. It promises to make payments easier, faster, cheaper, and more accessible across borders.
Yeah, imagine sending money internationally being as simple and instant as sending an email. That would be a game changer, especially for businesses operating globally.
Exactly, and for consumers, it offers greater convenience and potentially lower transaction fees. Plus, the pandemic really accelerated the shift towards digital payments as people sought contactless alternatives to cash.
Makes sense. We all wanted to avoid touching things.
Exactly, so we've got convenience, speed, accessibility, a lot going for digital money.
But are there any downsides to this transition? What are the potential risks?
That's the million-dollar question, and it's exactly what we'll be diving into next.
Sounds good. Let's take a closer look at the potential impacts of this digital money revolution.
Both on the global stage and closer to home.
It's a complex landscape with far-reaching implications.
Definitely.
So let's start by zooming out, looking at the bigger picture.
Okay.
How could this rise of digital currencies impact the international monetary system, the IMS as it's called?
The IMS governs global finance. It's designed to ensure stability and efficiency.
Right.
And digital money has the potential to disrupt this system in a few key ways. One major concern is currency substitution.
Currency substitution, break that down for us.
Imagine digital currencies make it easier and cheaper to switch to foreign currencies, especially in countries struggling with high inflation or economic instability.
So people might choose to use like a digital dollar or euro instead of their local currency.
Exactly. You could see people in, say, Argentina opting to use a digital dollar instead of the peso.
And if that happens on a large scale, Wouldn't that undermine a country's ability to manage its own economy?
Absolutely. It could have ripple effects on exchange rates, capital flows, even a country's monetary sovereignty.
Wow, so it's a big deal.
It is. Some countries are already expressing concerns about managing these pressures from digital currencies issued outside their borders.
So they're worried about losing control.
In a way, they're grappling with how to regulate these new forms of money and prevent potential destabilization.
It sounds like the global financial system is playing catch-up, trying to adapt to this new reality.
That's a great way to put it. It's like trying to fit a square peg into a round hole. The existing regulatory frameworks just weren't designed for this digital age.
Right.
Another challenge is the potential impact on capital flow management.
Capital flow management. What exactly is that?
Countries use various measures to control the flow of money in and out of their economies,
Okay.
but digital money is inherently borderless and often difficult to trace.
But it makes it harder to enforce those controls.
Precisely, it's like trying to build a dam to control a river, but the water just keeps flowing around it.
I see the analogy.
This raises another question. Could this transition to digital money lead to a digital divide? Will certain countries or regions be left behind, lacking the infrastructure or resources to participate?
That's a great point. We've seen this happen with internet access.
Exactly. It would be a serious setback if the same thing happened with digital currencies, further exacerbating existing inequalities.
Absolutely. And then there's the big question that a lot of experts are pondering. Could we see a shift in the dominance of reserve currencies like the US dollar?
That's a fascinating question. If digital currencies become the norm for international trade and finance, could we see the rise of new global reserve currencies?
It's certainly possible.
It is. The digital realm offers a chance to reimagine many aspects of the global financial system.
Okay, so we've explored some of the global impacts now. Let's shift our focus closer to home.
Right.
What are some of the domestic implications of this digital money revolution?
Well, one of the biggest concerns is consumer protection and data privacy.
Yeah, I can imagine that with digital money, your funds are essentially data stored on a device or a network.
Exactly. If your device is lost or hacked, you could lose your money.
So security is paramount.
Absolutely. And the potential for fraud and scams is always a concern with any new technology.
So what can be done to mitigate those risks?
Robust security measures are essential, but consumer education is also crucial. People need to understand how to protect their digital wallets and be aware of potential scams.
Right, education is key. And then there's the issue of data privacy.
Right. Every transaction you make with digital currencies leaves a digital trail. This data could potentially reveal a lot about your spending habits, financial situation, even your location.
That's a bit unsettling.
It is. We need strong privacy regulations to ensure that people's financial data is protected and not misused for things like surveillance or targeted advertising.
Makes sense we need safeguards in place. Okay, moving on to another crucial aspect, the safety and soundness of the financial system itself. How could digital currencies impact our existing financial infrastructure?
This is where things get really interesting. One potential concern is the impact on traditional banks.
Will banks become obsolete?
It's unlikely that they'll disappear entirely, but their role could certainly change. They might have to adapt their business models to stay relevant.
So they'll need to innovate.
Exactly. Perhaps they could focus on providing more specialized financial services or leverage their existing infrastructure to facilitate digital currency transactions.
But it's going to be a challenging transition for some.
It will be, and it's something policymakers need to carefully consider.
It sounds like we're on the verge of a major disruption in the financial services industry.
It's a real possibility, but let's not forget about the potential benefits.
Right.
One area where digital currencies could make a real difference is financial inclusion.
Financial inclusion, tell us more about that.
For people who lack access to traditional banking services, maybe they live in remote areas or don't have the required documentation, digital currencies could offer a way to participate in the formal economy.
So imagine a world where anyone with a mobile phone can access financial services.
Exactly. That's the promise of financial inclusion.
But it's not a given.
It's not. We need to ensure that digital currency systems are designed to be accessible and affordable for everyone.
Right, not just a select few.
Exactly.
Okay, before we wrap up this part, there's one more issue we need to touch on, climate sustainability. I've heard a lot about the environmental impact of cryptocurrencies.
Yes, the environmental impact is a growing concern. This is especially true for cryptocurrencies like Bitcoin that use a process called proof of work to validate transactions.
Proof of work, what does that mean?
It involves massive amounts of computing power to solve complex mathematical problems, which translates into huge energy consumption.
So Bitcoin comes with a hefty environmental price tag.
It does. Some estimates suggest that Bitcoin mining consumes as much electricity as entire countries.
That's a lot of energy.
It is, if digital currencies are to be a viable solution for the future, we need to find more sustainable ways to power these systems.
Using renewable energy sources, perhaps.
Exactly, or exploring more energy-efficient technologies.
It seems like we've only just begun to explore this complex issue.
We have, but hopefully this gives you a sense of the wide-ranging implications of this digital money revolution.
It's definitely a lot to think about.
It is from global power dynamics to consumer privacy, financial inclusion, and even climate change.
It's clear that there are no easy answers,
Definitely not. But one thing is certain, the future of money is increasingly digital.
and the choices we make today will shape the financial landscape for years to come.
Exact. And in this final part, we're going to zero in on the role of the International Monetary Fund, the IMF.
The IMF. What makes them so important in this digital money revolution?
Well, the IMF plays a vital role in maintaining global financial stability and promoting cooperation.
Okay.
And as digital currencies become more widespread, they have the potential to disrupt everything we've talked about.
Right. Exchange rates, capital flows,
Yeah.
monetary policy, financial inclusion.
The whole 9 yards, the IMF is essentially stepping up to provide guidance and support to countries as they navigate this new terrain.
So they're like a global guide helping countries through this digital maze.
Exactly, and they're uniquely equipped for this role. First, they have near universal membership, 190 countries working together.
So it's a global effort.
It is. It's like a forum where countries can share their experiences, learn from each other, and coordinate their policies.
So it's not just about individual countries adopting digital currencies. It's about how those decisions impact the whole system.
Precisely second, the IMF is laser-focused on macro-financial policies and spillovers.
Spillovers.
Yeah, they understand how changes in one country's financial system can ripple across borders and impact the global economy.
It's all connected.
It is third, the IMF has a broad range of expertise. They bring together economists, policymakers, legal experts, technologists to analyze this from all angles.
So they're not just looking at the economic side, but the legal, regulatory, technological, and even social implications.
Exactly. They're covering all the bases. And finally, the IMF has unique ties to member countries through its surveillance and capacity development activities.
Surveillance. What do you mean by that?
They regularly assess countries' economic and financial policies, providing advice and technical assistance to help them strengthen their systems.
So they're like a watchdog, but also a partner, helping countries adapt and thrive.
That's a great way to put it.
So how is the IMF adapting to address this digital money revolution specifically?
Well, they're incorporating digital currency considerations into their surveillance activities, meaning they're evaluating the potential impacts on countries' economies and financial systems.
So they're keeping a close eye on things.
They're also expanding their financial sector assessment program, or FSAP.
FSAP.
Yeah, to include assessments of payment systems and digital currency risks.
So they're digging deeper into the infrastructure, making sure it's robust enough for a digital future.
Precisely. And they're ramping up capacity development efforts, providing training and technical assistance to help countries develop the skills they need.
So they're helping countries build up their digital expertise.
Exactly. And importantly, the IMF is serving as a thought leader, conducting research publishing reports, engaging in international discussions to help shape the global regulatory framework.
It sounds like they're trying to stay ahead of the curve, anticipating problems and finding solutions before they escalate.
You could say that they recognize that this isn't something one country can solve alone.
It's a global challenge requiring global cooperation.
Exactly.
We've covered a lot in this deep dive, from the emergence of digital money to its impact on the financial system and the role of the IMF.
That's a lot to take in.
It is. So what does it all mean for the future of finance? Where do we go from here?
That's the big question. The world of finance is becoming increasingly digital, and we're all trying to figure out what that means for our economies, our societies, and our lives.
It's like we're standing at the edge of a new frontier.
It is full of possibilities, but also uncertainties.
That's a great way to put it. So as we move forward, how should we approach this new digital landscape?
I think cautious optimism is key. There's potential for innovation and progress, but we need to be thoughtful to approach, address the challenges, and mitigate the risks.
Well said. I think that's a perfect note to end on. We've reached the end of our deep dive into the world of digital money and the potential end of physical cash.
We've explored a lot.
We have, and we hope this deep dive has given you a better understanding of this complex and rapidly evolving landscape.
If you enjoyed this episode, be sure to subscribe to Xul Podcast, Shooting the Reality, for more deep dives.
And don't forget to share your thoughts in the comment section below. Let us know what you think about the future of money.
Thanks for listening, and until next time, keep shooting the reality.